Mswati inkosi ithula akayithathe akahambe nayo yadenza bakhe wone
Good afternoon. This is Market View. Thank you for tuning in. I'm your host, Lungilele Makakula. His Majesty King Mswati III on Sunday directed government to build a new 40,000-seat stadium for Eswatini, marking what would be the country's largest sporting venue. He revealed that designs for the stadium are already underway and said the project is needed to host professional matches that meet FIFA standards. Eswatini's current largest stadium holds just 10,000 people, meaning the planned facility would quadruple capacity and set a new benchmark for sports infrastructure in the country. The king further said the proposed stadium is expected to boost Eswatini's ability to host regional and international fixtures. The question is, can Eswatini afford this? Economist Sanilis Bia joins us for a conversation on this development. But first, our business news. In our first story, development of the 2 billion Malengeni Manzini Mall is shaping up as phase 1 platform of the project has been completed. The infrastructure premised to be a regional mall will create 3,000 jobs for Eswatini at its peak. Upon total completion and when the mall is operational, 1,500 people will be fully employed. This was said by the Minister for Commerce, Industry and Trade when announcing the joint venture of WBHO Construction and J&E Construction Company as qualified tenderers for the next phase of the project. In his remarks, the Minister, Honorable Mangoba Kumalo, implored the developers to enable the full participation of MSMEs by subcontracting some of the work to local companies.
We're happy to endorse as government the appointment of a joint venture called Manzini Joint Venture, which is a local company, J&E, that we've had very good experience with in many key projects in the country, partnering with a very renowned South African company called WBHO. Both J&E and WBHO will subcontract to a lot of Eswatini-led companies, smaller contractors, to do the various jobs that they will be working on. This is very, very important. In fact, I do want to say it with authority that I have on command from His Majesty to let you know, both Dion and Jose, that let us encourage maximum participation of MSMEs, subcontractors in the country that have the capacity to deliver such a project, and he is very expectant that that will be one of the things that we will realize as we deliver this particular project. The mall itself, after its completion, is going to be the biggest mall in the country and one of the biggest malls in the region, and it will employ across all the shopping outlets, together with the support systems that we are required to keep the mall going, 1,500 people. So again, we will have 3,000 people during construction. employed gainfully. And then when the mall is operational, we will have 1,500 people fully employed, which will be transformational, not only for Manzini, but for Eswatini. So mine is to congratulate the joint venture and to also state that government is always here to support. The Manzini City Council are here to support. That's why they're here with us today. And we will ensure that we remove any obstacle that may delay this project. My final plea would be to the transport operators in and around Manzini. There will be temporary inconvenience as they are moved to the temporary platforms, but it's short-term pain for long-term gain. What's going to happen in Manzini will be something to behold.
Women-led MSMEs in the country continue to shoulder a significant proportion of local agricultural production, yet many remain locked out of the formal financial system. This was a key issue highlighted at the Royal Villas as different institutions gathered for the introduction of a guideline manual on gender-responsive agricultural services developed in partnership with She Trades under the International Trade Center to help women, particularly in rural agricultural communities, strengthen their business skills and access new markets.
Although Eswatini's formal financial inclusion rate stood at 87% in 2023, the newly introduced manual notes that financial services in rural areas remain limited, and as a result, many women still struggle to access credit for inputs. The World Bank estimates that women-owned businesses account for a significant share of the global MSME financing gap, with sub-Saharan Africa facing a credit shortfall of more than $42 billion. It is with this in mind that the ITC She Trades, through the European Union and government of Eswatini, is capacitating local women across the various agricultural value chains, as closing this gap could unlock higher productivity, job creation, and stronger food security in the country and across the region. Principal Secretary in the Ministry of Agriculture, Sydney Smelane, says this marks a national progress towards a modernized, inclusive and competitive agricultural sector.
As a ministry, our mandate is guided by the Eswatini National Agricultural Investment Plan, the INAIP 2.0, and the Comprehensive Africa Agriculture Development Program, CADIP. We have committed to the Malabo Declaration's goal of tripling in intra-African trade. To meet these ambitious targets, we must address the gender gap, highlighted by the Food and Agriculture Organization. Global data shows that if women had the same access to productive resources as men, they could increase yields by up to 30%. In Eswatini, where women are the primary custodians of rural livelihoods, the impact of closing this gap would be transformative to our GDP.
The manual notes that women often lack collateral and have irregular income streams, making it harder to qualify for bank loans. Speaking on behalf of the EU delegation to Eswatini, Began Magongo says, because agriculture is an integral part of the economy, it is imperative that farmers, regardless of their gender, are equipped to deliver service that is responsive to economic needs.
Agriculture plays a very, very important part to the economy of the Eswatini. And more than just agriculture playing an important part, women in Eswatini are an integral part of that sector. So in the material that we'll probably be launching today, we are hoping that it will then address all the gaps that the women in Eswatini within the agriculture space do face head on. And it will also equip trainers, it will equip extension officers, it will also equip the farmers themselves on practical tools to deliver services that are truly inclusive and also responsive to the gender needs.
The total financing gap for MSMEs in emerging markets is estimated to have risen to $5.7 trillion, with women-owned businesses accounting for about 34% of that shortfall. In the region, this is of concern because women entrepreneurs are highly active in agriculture, among other sectors that are critical to employment and household incomes. The Alliance for Financial Inclusion advises that addressing the problem will require more than training, pointing to the need for gender-responsive loan products, credit guarantee schemes, and digital financial services. Reporting, Nautilus Tole, Derek Msibi, Eswatini.
And that's it for our business news. It's 9 minutes after 2. After the break, we connect with in-house economist Annelies Bia. Don't go anywhere.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. You're still tuned into Market View. This is the Tuesday edition. During the Ngwenyama Cup final, His Majesty King Mswati III made an announcement that has the potential to transform the country's sports and infrastructural landscape. His Majesty revealed that Eswatini is in the process of developing a 40,000-seater stadium that could position the kingdom to host some of the biggest matches and events in the region. Such an infrastructure project signals a strategic investment in the business of sports, with benefits ranging from tourism growth and job creation to SME development and international exposure. To help us unpack the economics behind this vision and explore what it could mean for Eswatini's sports industry and broader economy, we are now joined by economist Sanile Sibia. Very good afternoon, Sanile. Thank you for joining us here on Market View. A 40,000-seater stadium in Africa typically costs around 800 million to 2.5 billion, depending on the space. Based on the country's GDP, can Eswatini afford this?
Thank you, Nautilus. Good afternoon to you, and also good afternoon to the viewers. So when we are looking at the prospects of being in a position to manage and build such a huge national project, one has to think around issues of debt to GDP ratio. So when you're looking at the low end of the spectrum being 800 million, that should add around 0.9 percentage points to the debt to GDP ratio. So it should take it about to 43% if you include those loans that government is a guarantor to. It would take it to say 48%. But when you look at the spectrum, high end of the spectrum being 2.5 billion, what then would be doing would be adding some 2.6 to 2.8 percentage points to GDP, and it would take it to around 44% of GDP. And if you exclude those loans that government is a guarantor to, and then it would take it close to the 50% mark on debt to GDP ratio. So at this point, we really do urge the government to be a bit cautious on the loans until we start seeing this broad-based growth, where the growth is no longer just supported by these big infrastructure projects, but it then gets sustained by long-term business and long-term and sustainable businesses that are creating jobs. Then once we start seeing such jobs, such jobs and such growth in the economy, that is when then it becomes very advisable to continue taking up debt. And once you do that, the debt to GDP ratio would come down below 40%, meaning you have now growth that is being driven by the private sector and the overall economy. So we would send that caution because, as it were, given our debt to GDP ratio, we have a growth problem. The economy needs to grow. So we need to be a bit cautious around our growth until and unless we start seeing sustained growth, then we can think more around debt.
What's the economic case for a stadium, Mr. Sibia? Is it really crucial that Eswatini constructs such a huge stadium, 40,000-seater stadium?
Actually, I would say we need 100,000-seater if you are to build an economic case for having such a stadium, because you have to think around sports tourism, around mega events, like hosting these very big concerts and being able to attract games in Mpumalanga and other games in South Africa to come into Eswatini, being able to have these big concerts like you have your Boys to Men come to Eswatini, and you would need to be able to have quite other events to fill up such a dome, right? So when you think around this stadium, you have to think around those issues, whether you are going to be able to attract that kind of business, because we need to treat it as an investment where it also creates a value and makes money for the economy so that somehow it pays for itself. So there would be an economic case to be made, Notsile. And then also there is just issues of national prestige. We do need a big stadium, just as we do need a parliament that looks, very prestigious, and it does look like a place where all the laws are being made. So other projects really are not about an economic case, they are about national prestige, but this one we're talking about, particular one, can also be translated into a viable economic endeavor if you're able to plan well for it. But you do need to think around the sources of financing and how we are going to manage it and how we are going to maintain it so that it is at that level which can attract those big events, and it would dovetail with what we are seeing happening at the ICC and FISH. So you need to kind of think of Eswatini going into the MICE space, which is the meetings, industry, conferences type of space. So you need to, an incentive space, you need to then make sure that you have a good, marketing plan and operational plan and maintenance plan so that you are able to continuously attract such businesses into the kingdom.
Yeah, we know such projects, Mrs. Bia, bring in a lot of jobs, in particular for Swazi. So how many temporary jobs and how many permanent jobs after this project has been officially completed will it bring to Eswatini citizens?
So when you look at the building stage, that's when you'd be employing the architects, employing the skilled builders, and employing the non-skilled builders, and you'd be getting the welders in, people to manage the steel. You'd need to also get people in to manage the turfs and all of those things. So that's where you're looking at a lot of jobs coming through. That should be around, in my estimation, the region of 4,000 to 5,000 jobs during the building stage. Where we worry mostly is how many jobs are you going to create directly after the building stage, because then you would need people to manage the stadium, maintenance, and the electrical work and those things. So that's why we see the number really dwindling to around 500 overall, because you look at the way it's going to be run. And then you are also going to have these spill-off effects that depend on the magnitude of the events that you are going to host. So if you build the 40-seater stadium and it's able to attract that much traffic and does fill up, then you are looking at jobs on the sides of the transport sector, because you need to transport people into the venue. You also looking at tourism and accommodation, because people have to sleep somewhere. You're also looking at the vending and hawking, and also the retail, which has to make sure that the people are fed. And then you have all of those downstream activities, including the crafts business, not silly. So you have to really think long and build the process right through to the rollout and how you're going to implement it before we even get to it. So what we are calling for is a proper cost benefit analysis, where we're able to really quantify the potential costs and the potential benefits, and then we look at it and see if it does bring an economic return. That is, if we want to treat it as an economic endeavor, and which is the most advisable and most advised path, because it does have a lot of potential to make money.
Just lastly, Mrs. Beer, before I let you go, what could be the economic impact, with having a 40,000-seater stadium? We are seeing the benefits of the construction of the ICC. What could be the economic impact of having this humongous stadium?
So the economic benefits, I'm glad you've mentioned the ICC and FSIH, because there what we're seeing is Eswatini coming into the mega event space, which is the MICE space. So you could also use this type of endeavor to really come into that space in multiple fronts, which for us is an entirely new industry. So there is that direct economic benefit, because if you think of it, we've hosted local events in there, but if you look at the potential where you could even host other games, when you have you could host other games, you could host big concerts. The possibilities are endless. You could host these big crossover events, the churches. So the possibilities are endless, not slow. It's a new space for the kingdom. We've always done it, but at a very small and micro level. But right now we are going big and entering into that space and into that industry, which is valued at approximately $1 trillion globally. So Eswatini can come into that space and take a bit of that pie.
Thank you, Mrs. Bia, for that conversation. After the break, in just a few seconds, he comes back for the final segment, the market analysis. Stay with us. All right, so now our final segment, the market analysis. Suddenly, what's happening today in the world of markets?
Thank you, Notsile. So again, we are seeing a mixed picture in the market because of what is happening in that Israel-Iran conflict there. Just last night before we went to bed, there we saw President Trump, making a statement stating that the peace deal is actually on life support. So markets are looking and reading closely into that. And then also we are looking at, we're looking at the readings, the inflation readings that are coming out from the U.S. I think they're coming out later today, as soon as markets open up in the U.S. And then what we are looking for, Lungelele, is just how markets are handling that. So when we start in the US, what we're seeing is, markets are relatively upbeat, just given the fact that the tech companies continue rising amid all of these wars, right? So we're seeing the Dow Jones Industrial Average just edging up to 95.31 points. The Nasdaq Composite Index edging up 27.05 points, and the S&P 500 continuing to break records there, standing now at 7,412.84 in overall trade today, largely buoyed by those movements in in the tech sector, and also just basically the resilience of the U.S. economy. And I think, the news just coming out of California today and out of the U.S. is the last tanker that left before the war has actually reached the U.S. So we're going to have a bit of that stability in terms of oil, for the next 2 weeks within the U.S. And then coming into London, we're seeing the FTSE 100 and the DAX and the CAC 40 all on the negative side of the market, of the spectrum, largely driven by the fact that in today's trade, Brent crude continues to be on the rise following those sentiments that President Trump made around the issues of that deal being on life support. So we are seeing that overall, and the worry and the fear towards the issue of the ceasefire being on life support, Lungelele. So all of those factors are playing into the numbers that we are seeing. The FTSE 100 is down 36.9 points and really struggling to get back to the 10,500 mark and up to the 10,700 mark where it was before the pre-war. So now that's because, in Europe, the cost of energy, Europe was importing quite a lot of its energy through the Strait of Hormuz and through from those Gulf Asian Gulf states. And then when it comes into Germany, we know that Germany is a large manufacturer and exports quite a lot of manufactured products, and oil is really just one of the major factors there. In Paris, we do know that diesel is more or less the standard for any vehicle that is on the road. So the fact that the ceasefire is on life support really just does send jitters into those European markets. And then in terms of Japan, we're seeing the Nikkei up 324.69 points, which is a relative divergence from all that we are seeing in the markets today. The Hang Seng is down 58.93 points, and the Shanghai Composite Index is down 10.53 points, though staying at a very high level on that 42,190, on that 4,214.49 points. Now, that's largely driven by the fact that what we're seeing in Japan is gaining off of the performance of the tech stocks, while overall Asia is just basically reacting to the surge in the price of Brent crude oil. And also we're seeing the issues with China's manufacturing slowing down, and also the inflation going up within China. So now that sense, the inflation fears, they're becoming a reality right now. And in the JSE, when we're looking at the Johannesburg Stock Exchange, overall the Johannesburg Stock Exchange is down 2,393.2 points in today's trade, largely owing to that fragility in the ceasefire. And also, if you look at the rand exchange rate, it's also really on a downward spiral. And if you look at the performance of the gold or the miners, again, that one is in some sort of a downward spiral. So those all are the factors that are pulling the Johannesburg Stock Exchange downwards. But majorly amongst those is the price of Brent crude oil breaking the $105 mark per barrel. And then coming into Eswatini, things remain relatively stable within the Eswatini economy. And then going into the prices of commodities, gold is down, sitting on $4,700 in today's trade, down 2.82 points. And then, now that's largely driven by the fact that we're seeing the inflation data coming in and showing signs of inflation having increased. So once we start seeing that, it improves the bet that central banks are going to actually increase interest rates, and it makes those interest-bearing assets relatively lucrative compared to gold at this point in time. Price of Brent crude oil is up 107 to $107.88 per barrel, largely driven by the fact that we seem to have a ceasefire that has a lot of fire. So we need to start seeing that ceasefire, being more stable. Then we're going to see the prices going down. In terms of the currencies, the USD to Lilangeni, well, the Lilangeni is actually weakened a bit against the dollar, sitting at 16.53 against the dollar down some 0.62 percentage points. And the euro to Lilangeni, again, the Lilangeni is down against the euro, down some 0.32 percentage points, sitting at 19.42 per euro. And the Japanese yen is also stronger against the Lilangeni, where one Lilangeni now gets you 9.54 Japanese yen. Now that's largely driven by the fact that we're seeing a downward spiral in the price of gold, and we're also seeing capital flight due to that volatility within the Asian Gulf region, the Persian Gulf region. Thank you, Lungelele.
Thank you, Mr. Smia, for that analysis. We've come to the end of our program. You've been watching the Tuesday edition of Market View. Thank you for tuning in. See you again tomorrow for Nedbank Business Watch. Have a lovely day.